Hey everybody, it's Mike from Orderflows, and welcome to today's video. Today is Wednesday, October 12th, 2022, and the subject of today's video is on trap traders, and that's a term that really gets abused a lot, and I think is really misinterpreted to mean something else. Really, what the term I prefer is, stuck traders or traders caught offsides, which is really what's happening. And sometimes it's hard to see on a regular chart, and I've seen people show bar charts and say, oh, there's trap traders here at this high. I mean, you're just guessing. Really, what is a trap trader? Well, it's a trader that's long and wrong or short in the hole. And unless you're looking at the volume, honestly, I don't understand how people can say, oh, there was traders that were trapped up here, because you don't know if what traded at a high was small volume. It could have just been one or two contracts traded up here at a high. For example, let's just go back a little bit here, right? People, down here, right? Market broke out here, took out this low, traded 9 contracts. People say, oh, there's trap traders down there. No, it traded 9 contracts. Okay, even if those traders were trapped, it's only 9 lots, right? That could be you or me, our position. Especially on a bar where you're trading, 44,000 contracts and you got a volume of 9, over here you got 2. People, they see the market poke up or poke down and think automatically, oh, there's trap traders there, the big money sprung a trap. It's all just nonsense, really. Really what it is traders that are caught offsides, generally speaking at a high or a low, but it could even happen in moves. And I'm going to give you some examples here today. In the S&Ps, this is the E-minis. This is a 30-second chart. People say, well, it's such a fast chart. No, it's not really. 30 seconds is the new 1-minute chart, I think, in my opinion. But you can see here this red candle up, right? We're sort of coming up to the swing high, 36, 16 and a quarter right here. And you have this buying imbalance here, okay? Now remember, I spent a lot of time recently talking about imbalances. Imbalances occur as a result of a two-way auction when there's more aggressive trading to one side, and that alone is sort of the first step to recognizing traders that are offsides. Because if you have an imbalance at a high and the market comes off of it, what do you think the trade is going to be? Do you think we're going to come back up there? No, most likely not. I mean, eventually, the market may come up there, but really in the order flow makes it so easy to see when traders are offsides. And actually, I have a term for this that I've coined many years ago. It's called an inverse imbalance. And, a stacked imbalance, which is what most order flow traders are used to looking for in the market, is a stacked buying imbalance would be 3 or more buying imbalances stacked in a bar, or a stacked selling imbalance like this right here in this bar, the 108, the 25, the 74. This is a stacked selling imbalance. The next bar got another stacked selling imbalance. There is, here's a stacked buying imbalance, right? In green candles, you expect to see the aggressive buying, right? I mean, that's normal, right? Market's going up, you're seeing aggressive buying. Just as market's going down, you see selling imbalances, right? I mean, aggressive traders are present. They're selling the market down. They're hitting all the bids, the next bid and the next bid. But what about when you're sort of up here at this swing high? You got the aggressive traders. Again, remember, when you're looking at a bar, the bar is not complete until the conditions are met. In what I mean by that is, if you're looking at a 30-second bar, it's got to do the full 30 seconds, right? Because early this bar is quite bullish, right? You see that buying imbalance up here, the 58, the 113, even down here, the 118. But then, conditions change for whatever reason, okay? As order flow traders, we don't really care the reason why it's changed. What we care about is that it's changed, okay? So what's happened is early in this bar, you got very aggressive buying, but something happened, something changed. And then you got aggressive selling. So you got aggressive buying on the top half of this red candle, aggressive selling on the bottom half of this red candle, right? So I mean, you expect to see aggressive selling in a red candle, right? That's normal, but you don't normally see aggressive buying at the top, especially coming in at a swing high here at 16 and a quarter, and then it just reversed, right? So the easiest way to see these traders that are caught offsides, and offsides is a soccer term, or sorry, a football term, where the ball is kicked, or sorry, where the players, the other team's players up near the goal before the ball is kicked, right? That's offsides. It's just like what's happening here is, traders are jumping over themselves, FOMOing into this market, and then, I don't want to say the rug gets pulled, but you know what? Conditions change, and the market gets whacked, right? And it sells off. Now, if you're looking at a footprint, it's pretty easy to see, right? All you gotta do is just simply look for these red candles and these buying imbalances up there. Okay, but again, it's not something that happens all the time. And in our Orderflows Trader software, we actually have a function in here. We call it the inverse imbalance setting, because basically what it is, it's the opposite of what you would expect to happen, right? With the static buying imbalance, you expect the market to go up, but it's actually doing the opposite, right? This is what it is, inverse imbalance. Now I have it turned off on this chart. This is just my plain footprint chart for all you guys that just use a plain footprint chart. But on the Orderflow Trader software, right, you can see it just sticks out right up here like a sore thumb. I mean, it doesn't get any more obvious than this right here. This big, you can even draw out the zone, this overhead resistance. I mean, look at that. The market just sold right off. You came down here, you had an inverse imbalance, a buying one. Market went up a little bit. So imagine if you're short from up here around the 14 area, down to the 3600. It's a 14-point move. Okay, maybe you get long in here. You get stopped out. Fine. You just had a 10-point, 14-point winner, and then you just took a 2-point loser here. But again, this is not something that happens every day in the market. Some days, more volatile days, it probably happens a bit more than normal conditions. I don't think there was anything yesterday, but it happens, in plenty of other markets. Here's the euro currency today. This was a nice one. The market sort of worked its way up, started coming off. You've seen some aggressive buying coming in here, but what's it running into? It's running into supply. But these traders, they're market went up. Oh, this is my opportunity to buy the dip, right? BTFD, buy the dip. But it's met with supply, and the market drops further. This is from the 97, what is this, 9740-ish area, right in here. You could have gotten short somewhere in here, 38 even. Heck, let's call it 36, because there's a lot of volume went through here, 37, 36. All the way right straight down to 97.15, 97.16. Eventually the market did recover and come back up there. But for now, these traders were caught offsides. Gold. This is a nice one in the gold this morning. Euro currency one came in at 9:36. The E-mini one came in. What time was that? At just after 1:30. Gold. There was a nice one here. Some of these commodity markets, sometimes you seem to get a bit more, like gold. There's a nice one here in the gold. This one came in at 8:34. So they're coming in at different times. I think gold had a couple. Must have been earlier in the morning. Oh no. But you can see yesterday, right? Yesterday, not really anything here. There was one. Where was it here? I just saw it. This small little one here, right around 10:30. Yeah, I prefer them to come in at swing highs rather than as the market is moving. But generally, people ask, what's going to be more effective? Well, ideally, what you want to have, if you're thinking of offsides in the purest sense, it's when it appears at a swing high or a swing low, or just off a swing high or swing low. Again, I would have given this one some serious consideration if the market started moving down. It didn't start moving down until about 5 minutes later. When you have offsides, you want it to be confirmed pretty quick, right? Like here, right in the next bar, it confirmed it, right? And by confirmation, what I mean is, the market to start moving away from that level sooner rather than later. Now, in markets that are a bit more volatile, M and Q, you're going to see more. Okay. Now, again, if depending on what your settings are, how you want to identify one, for me, I like there to be at least 2 stacked imbalances on more volatile markets. M and Q, maybe you want to make it a little bit bigger, 3. But again, it's up to you. Do your own analysis. Basically, this is a 2, level 1 here. All right, this one came about 2:30 in the afternoon, started moving up, pulled back a bit towards that level, and then just skyrocketed up, right? We're talking a move from, you'd be getting long, I don't know, 65, 66, it just shot straight up into the 80s, going into the cash close. A bit earlier, there was a short here, another short here, a couple of longs. There's a nice one, market sold off, pulled back up towards that level, then sold off. Here's some buys. So it's a nice sell up in here. But again, on a market like MNQ, you'd probably want to use a stronger setting of like 3 imbalances as opposed to just 2, because 2, on a volatile market, getting 2 is fairly often, I guess is the term I would use, as opposed to a market like E-minis, right? Because the volatility in the MNQ is much more than you're seeing in the E-minis, okay? And even it's much more than you're seeing in gold, right? So a level of 2 might not be strong enough on the chart that you're trading. People also ask, can you use this on a longer term chart? Well, you could, but generally, stacked imbalances don't last that long when you start going up on higher time frames, like on a 5-minute chart or something like that. For example, okay, so this is well, this is my euro currency. All right, let's just change this to a I don't know what market. Well, bonds, you really, I'm kind of curious what bonds are going to look like. I doubt you're really going to get much in the bonds, if anything, because it trades a lot. Generally speaking, it trades a lot of volume. It doesn't have that same volatility that you have in the equity markets. But I mean, nevertheless, let's pull up a chart and see how it looks. Here we go. Yeah, I'm not seeing any. I was just curious to see if there would be any. I mean, you never know with these things. Yeah, I mean, you just don't see it in certain markets just because, the way that they trade. So again, it's not something that you're going to see in every market, but, if you, I don't want to say adjust your chart type, but, treasuries, I like looking at, on a 4 range chart. And, the reason for that is, trades in, I don't have any big scientific reason other than it trades in 30 seconds. But, I've always looked at bonds on that sort of time frame. Yeah, nothing. But again, what I have the setting set at, if I were to actually change the setting from, because I'm on a 4 range chart, okay, so getting a stacked imbalance on a 4 range chart is hard enough, and getting the inverse imbalance is going to be even harder. So let's shift it. Let's change it to 1. Okay, because what this would mean now is not necessarily that traders are off sides, but it's generally meaning that there's supportive buying or resistant selling coming into the market, right? You can see right here, right here. Now, when you have it set at 1 in a thicker market like interest rates, it's still traders caught off sides, because what's happening is traders they're buying this offer, right? And it's a strong offer. It's causing an imbalance. And this sort of follows up on the discussions that I had yesterday. But you can see right here, right? It's giving you some very strong directional signals, especially when that imbalance isn't tested in the next bar. Now again, I wouldn't use 1 on a market like E-minis, or definitely not NASDAQ, because you're going to get a lot of inverse imbalances. But on these thicker markets, I mean, look at this, right? Look at that. It's traders, I don't know, I see a lot of videos people post on FinTwit, Twitter, and gosh, even on Facebook and stuff, and they're really trying to get very complex. You don't need to get so complex. Okay, well, what does it mean when I have a buying imbalance in a red bar? What does that mean? It's very simple, right? It means you have supply coming into the market. Just as what does it mean when I've got a selling imbalance coming in on a green bar? Generally, it means there's supportive buying coming in. Simple, right? I mean, don't make trading more complicated than it needs to be. All right, guys. Anyway, I'll end it there. Hopefully you're coming away with some information. And again, it's looking at a normal footprint like this. Yeah, you can see it, right? But you gotta know what to look for. This is why why I created my own software to help me in my own trading. And we just released the newest version, Orderflows Trader 6, and this is just one of the tools in there, to help traders. I mean, if you're just using this one tool to take these trades, what would that mean, to your trading results? I mean, you can see how nice these trades look, right? I mean, yeah, you have some that don't work out like this one, but fine. You've got some that work out quite nicely, here. So anyway, guys, I'm just probably preaching to the choir. I get excited when I see stuff like this on a chart that just stands out so easily. So anyway, guys, if you enjoyed this video, be sure to like and subscribe. Like the video, subscribe to the channel. I enjoy making these videos. It sort of reinforces, my followers, what I look for in the market and what you can start to look for in the market as well. So anyway, guys, have a great day. Talk to you tomorrow. Bye-bye.